All right, good morning, ladies and gentlemen. Today is January 8th, and I am back with the live show. As you recall, last weekend, or last week, last Wednesday was New Year's Day, a holiday, so I didn't do a show. And the Wednesday before that was Christmas Day, so I didn't do a show. So it's been a while. But here I am, and a lot of interesting stuff going on. I'll probably try and do a fairly quick show today. Trump is set to speak at 11 o'clock, 1 hour from now, regarding the situation in Iran. I should say Iran. And last night was really interesting, obviously, if you were watching the futures market. If you weren't watching the futures market or paying attention to any of that stuff, then there was a dip last night all the way down to, and this is on the S&P futures. So last night there was a dip down here to, let me double check my chart to get it accurate, but I believe it was, the low was like 31.98, right? Way down here. So that's kind of amazing. And then it recovered. The market recovered overnight because it looked like that it looked like things weren't gonna really get out of control. So kind of wild though. This is it's pretty amazing that overnight futures. I wanted to check that again, just to make sure here. No, I'm sorry. It was the low last night was 31.81. Okay, so picture this, 31.81, right? And the S&P futures and the actual S&P are pretty close. They're correlated, like literally they're almost identical as we speak here. 32.47.50. And so that was the overnight dip, right? So like last night, market traded all the way down to there, which was roughly, I think I did the calculation earlier this morning. It was about 1.7, 1.8% dip last night. And then, if you've been watching the news, you know that things sort of simmered down or whatever. And so it's going to be interesting to hear what Trump has to say here in an hour because obviously, the market's kind of been shrugging off everything, right? And so this is pretty amazing. This all-time high, the history of the S&P up here is the first trading day of January for the new year. So that's kind of interesting. And I mean, here we are, literally, we're as close to making a new high as we can without, except for that particular day. So the market is again extremely resilient. A lot of people are saying that that's the result of the Fed providing liquidity, not QE, all that good stuff. So man, there's so much going on. We're headed into earnings season here. We've got all this sort of tensions in the Middle East going on. It's an election year. Market's at an all-time high. Seems like nothing can stop it. So quite the interesting environment we're in. The Qs, the Nasdaq 100, tagging an all-time high here. All-time high in the history of this ETF. Tech stocks are still hot. Nice uptrend there. I mean, not we haven't had an actual pullback in a while. I mean, the last actual dip in the market was back here in September, October. Well, let me go to the SPX. Yeah, September, October. I mean, that was like the last actual little dip. And of course, we had some craziness this past August. August is typically a dull month, and last year it was not a dull month. It was a lot of wild up and down swings, but this was the last actual dip we had, and the actual trajectory of this current rally is astounding. It really is. I mean, if you zoom back out, so there we go back to include all of 2018, and then here's 2019, and so this rally really kicked off right around these 2 days right here is where this rally kicked off, and the news right in this area here, and a couple days later was obviously Trump announced the phase one of the trade deal, right? That's what this gap was all about. And then a couple days later, the Fed announced that yeah, that's when they started expanding the balance sheet again, and they had lowered interest rates here, and they lowered rates here, and they were expanding the balance sheet and all that. And so, there's a lot of chatter out there that this entire rally is a result of Fed liquidity. So, whether you believe that or not, there's no arguing with price, right? See, that's the that's the thing that a lot of people are learning in this market is that we've always been huge fans or big fans of technical analysis, right? And so the price is the final arbiter, and no matter what you think is going to happen, basically, you're better off just the market never really does what you want. If you want the market to go down, it's not going to go down. And so here we are. Rally intact. Everything that's been thrown at this market hasn't phased it. And so, now this could potentially be like a topping type of pattern or whatever. I like to go to my chart that has look at this. Look at the RSI. RSI got extremely overbought, and it's kind of coming down a little bit now because the market's sort of making like a little sideways consolidation here right up at the highs. So this is going to be an interesting year. And so far, let's dive into the trades we have here. So far this year, things have been looking pretty good. We have I wanted to take a quick peek over here at the closed trades. What we've done is moved all the closed trades for last year onto their own page and table so you can review those. And am going to do some analysis on that. I haven't had a chance because I've been dealing with the holidays and having company in town and all that good stuff, and then the aftermath. And so, quite honestly, it feels like with Christmas and New Year falling on a Wednesday, both of those weeks were essentially holiday weeks, and I had lots of stuff going on. And so, this week is honestly like sort of the first week, officially full week back to work, and today's we've only had 2 days of that. So things are settling down, but I did want to talk about this one particular stock that just got closed here yesterday, the CZZ, because I think this is probably one of the best examples that we'll ever have of how the system is. Oh, look at that! Wow, how the system is designed to work, or how the system works when it works the way it's supposed to. Look at that! That's what a coincidence that yesterday, this trade opened back here, um, this day on 12/3, right? 12/3. This was the day that the stock triggered in. So it was on the triggered today list on 12/2 after we ran the update. And then so on 12, the idea obviously is that on 12/3, you'd have been looking to enter this, and it filled right around, right, literally right at the trigger price. But so this is pretty much an example of how things work when they do work, right? And so, basically it triggered in, hit the target really quick, which is kind of unusual. But the target's based on the ATR of the stock, right? And so, sort of based on the monthly ATR of this stock, from 1750 to 1845, percentage wise, was just under 3 ATRs. And so the interesting thing is that this stock literally went into sort of a parabolic rise. It went into a parabolic uptrend where you had day after day, you had higher lows than the previous day, and that's kind of unusual. I mean, you see that occasionally, but it's not extremely common that stocks make a move like this. And so, long story short, you can see all the trailing stops, and there's probably a couple of trailing stops in the middle here that in between these that I didn't get in. So, but pretty amazing. And so basically it came up here, and then there was a couple of spots where it looked like the move might be over. And then this day right here, that basically, it's like kind of a bearish engulfing candle, it looks like. And so that particular day, it looked like, kind of marked the end of the beginning of the end for this move. And by then, within a couple of days, by the next day, the stop had moved all the way up here. And so it was essentially protecting the entire gain. And then it looked like, for a little bit there, up until yesterday, it looked like might get a continuation move higher. And so yesterday it came down, and the low here was 2271, and the trailing stop was it had moved up to 2280. And so basically, it went onto the closed trades table, and with a 30% gain. So pretty extraordinary. And that's the reason that our system is based on selling half at the target and letting the rest ride with the trailing stop. And so not too shabby. Really good example of a closed trade. And it was open for a long time. And so what you'll see is that the trades that work, the trades that work, the system's gonna keep you in that trade for as long as possible until the momentum, fades and turns, right? And so this was just an extraordinary momentum. Interesting thing about this stock, this particular one, is that prior to this trade here, there was also one back in the fall of 2018 that worked out pretty well. It was nothing like this, but so this is an interesting stock. Look at this primary trend line. I mean, this thing had just absolutely gone parabolic for reasons which I don't understand. I mean, I would occasionally looked at the news on this, and a diversified Brazilian company, but sometimes they do that and just sort of flying under the radar. So anyway, some other respectable trades have been closed. These are the closed trades for 2020, right? So we're putting them in their own table, kind of getting a nice fresh start for the new year here. So anyway, what I wanted to go over today was real quick for anyone new here. Um, you log in here at night or in the morning before the market opens. We've been running the update. Some of the updates have been late recently, so I'm going to say that, we try to do it like 2 to 3 hours after the close, but with all the holidays and that type of thing going on, and being away from my desk and out of the office sometimes in the evenings doing things, the updates have been a little bit later. But anytime after 8 o'clock, you should expect to see everything updated here. And we probably going forward, it might be a little bit get back to a earlier schedule. But first thing you want to check is the triggered today trades, right? Anything that shows up here at night or like this morning, right? If there was anything that was triggering, is a buy for today. And then of course there's only a few pending trades here. We actually looked at last time I did a show a few weeks ago. We looked at the pending trades, and a couple of them have triggered in, and a couple of them have dropped off. So it's always the first thing that you want to check, and you don't really need to worry about the pending trades. Although it's kind of interesting to look at the charts of them and see, kind of where they are in their little cycle here. When they first hit the pending trades table here, a lot of times the trigger price and current price will be pretty far apart, and then as we've discussed on the show before, and I've shown you on the charts. They tend to converge at certain points. So anyway, if I had done this show yesterday, there would have been two new trades that just opened yesterday. So I want to take a look at those, and I already have them marked up. There's PODD and this DHI. So these triggered in. The date that they triggered in is the date that they closed above the trigger price, right? And so that's I'll show you on the chart here. I'll show you how this works, right? So PODD 1.6. This was the trigger line here, 174, and so the idea here for anyone new is that we're looking for a stock, looking for stocks that are in, primary uptrends, right? Nice primary uptrend. Then that stock has a pullback, and then the pullback sort of, runs its course, and then the stock starts to rally back up, and that's what we're looking for. And so the idea is that sometimes we get like these little sort of fake out pokes at the trigger, right? We've seen plenty of stocks that kind of poked at the trigger, never broke through it, and then they just kept, they kept fading down. They kept the pullback that was underway continued. And so the important thing is the way the system's designed is it's like a trade barrier, right? And so the confirmation of a change in trend from a pullback to a resumption of the uptrend is a close over the trigger price. I know there's a couple of you that are playing this a little bit different, like something like this. If you're sitting in front of your screen and you're more of a short-term trader, you can. The great thing about the way we've designed the system is it allows a lot of flexibility. It can actually be traded in a number of ways, right? Like you can choose to do different things on a stock like this where you get a close over the trigger price, right? Like way up here, and this is not a great example because there's a few bucks on a very expensive stock, but there's a couple things you can do. One, Jeffrey's little strategy that he likes to talk about is you enter half a position, right at the open the following day if it's over the trigger, and then you set a limit order for the other half to get filled right at the trigger. Now, in something like this, you probably wouldn't want to do that because it's such an expensive stock. But we've seen times where you get a real big like gap up the next morning, or the close is way over the trigger price, and so you don't necessarily want to just jump right in there, but it all kind of works out. The other option is you set a limit order at the exact trigger price to be filled, and you may or may not get filled on that, and so you might just have to move on to the next one. But anyway, so here we are. And here's sort of how this works, and I'll show you a couple other examples here in a minute. But generally speaking, when the stock triggers in, the initial stop, which this should actually say initial stop. I like the initial stop. I like to differentiate between the initial stop and the trailing stop, but you'll notice that the T stop is basically the trailing stop, and it's also going to serve as the initial stop when it first pops on. By the way, when a trade triggers in, you're going to see it on when it hits the triggered today list. It's going to tell you the target and stop right then, or calculated as soon as it's considered filled, and so you have all the information, and basically, you can buy the thing. Like, this would basically be the official entry price right there, yesterday's open, and you can buy it, set your initial stop. The target on this is 184. That seems doable. So, up here there's the target. And as we've discussed before, it's not a bad idea. I highly recommend that you compensate for the difference between whatever the trigger price is and whatever your entry price is, compensate for that on the target. It's fairly easy to do. In fact, I mean, it's simple math, but the idea there is that you want to get the same you want to get the same gain that the system is going to show from the trigger to the target. So the target on this is 184, right? So, the trigger's 174. Yesterday's open was 177.50. So that's $3.50. And so this would basically be your target up here. Right near the highs, of course. It's not always going to be at the highs, but so there's basically, the target I'd be looking for on this. Unless you held off, right? I mean, and that's the other thing too is based on what the market's doing right at the open, based on sort of what's going on, what the price action looks like at the open. Because a lot of times, like the first 5 minutes of trading is just, it's just crazy. As a matter of fact, let's look at this just for the fun of it. Yeah, so I mean, look at yesterday's open there. You had a range from 180 to 175 in the first 10 minutes of this, and so sometimes it wouldn't honestly be a bad idea. And so there's the trigger price down here, 174. And so, it got down here to 175. So you're sitting there, you watch the stock open, you see all this like craziness, right? And we don't know how much volume there was up here, or, what it kind of looks like. Well, I don't know. I mean, it kind of looks like this was just almost an anomaly. So, anyway, the idea is that you might want to let the market open, trade for a while, and then say, okay, well, I'm pretty close to the trigger price, the entry price down here, so I'm just going to go ahead and jump in. And so your price is basically going to vary. That's what I'm getting at. Um, and so we try to design this so that you don't really sweat the small stuff. You don't sweat a couple of bucks, because when they work, as you guys that have been around a while see, they work really well. Let's move on to this next one, this DHI. Same exact sort of thing, right? So it triggered in on the 6th. DHI triggered in on January 6th at 53 and a quarter. Trailing stops down here, like sort of right below the low of the pattern. And this trailing stop, by the way, is going to come up pretty quick. You never really want to concern yourself with the distance between your entry and the initial trailing stop. And the reason for that is that the system always like starts the trailing stop, not always, but usually starts at the low of the recent lows, whatever the pattern is. And then literally like the next day, like tonight, this trailing stop will already start to ratchet up. And so the idea behind that is obviously it's based on, again, like the ATR of the stock. And this looks like it has a pretty good ranges. I mean, this is actually as a home builder, right? DR Horton. So good looking uptrend, nice pullback and consolidation, and so there we are. And so the point I was getting at. Let's look at the open on this yesterday. Yesterday's open on this was a gap up I'm sorry, yeah, it was a gap up, right? So not a huge big deal. I mean, it looks kind of dramatic, but it gapped up in the first 5 minutes and then spent the rest of the day fading back down, right? And so it is what it is. You could have just decided to go ahead and get in right at the open, or you could have waited for a little bit and see what happened. Anyway, so if you got in at the open, it was an extra 75 cents, and then you watch the stock go all the way down. And this is why we don't sweat the small stuff, right? Because look at today. um, Today everything's looking good, back to normal. So, and like I said, tonight I expect this stop to, probably. Well, I don't want to guess, but I'm gonna guess that this stop comes up over the next couple. If this just basically stayed in this range here, this stop's gonna come up relatively quickly, and it's gonna be like minuscule percentage wise by the end of the week, right? So anyway, target on this, which I hadn't marked yet, is the target on this. Wow, is 54.50, which it hit today. Well, I mean, it's literally like hit this already this morning. So that's a pretty unusual case. But again, it's based on it's based on the calculations. The While these look like long range bars, keep in mind the increments here are only a quarter on this chart, and so there's your target right there. It seems kind of crazy, but that's it. Trigger 53 and a quarter, target 54.50. Huh. Yeah, another thing I wanted to mention is that on the triggered today, like on this triggered today list, the average range, something like this DHI is probably like 2% ATR, right? So that's going to affect things a lot. Like, and sometimes if there's a whole lot of stocks triggering, you can use that ATR as sort of a decision point on maybe which ones that you're interested in getting into. So I tend to gravitate towards higher ATR stocks. They have more action, and the percentages are going to be bigger in that. And so, anyway, it's kind of a set it and forget it type of thing, right? Oh, so what I was getting at here is yesterday's open was 54, and so again, you'd want to add 75 cents to this target if you just bought in 75 cents higher. And so this target at 54.50, you'd have your target would basically be up here based on taking an entry at yesterday's open rather than the actual trigger price. Here's one of the cases where you could have seen that the stock triggered in, and interestingly enough, see it triggered in on the 6th, right? And look at the close there. The close that day was 53.41, which was just barely over the trigger price. And so, like, you could have thought, even that night or in the morning or whatever, you could have thought, well, geez, this thing's gapping up here or whatever. I'm just going to set a limit order at the trigger price and see if I get filled, right? And so, this is one of those cases where we're doing that. Setting a limit order at the trigger price worked for you, and you could have got filled at this exact trigger price. And then, of course, the idea is that if you set if you set the initial stop and you set your target as limit orders at your broker, then it's kind of like the only thing that you really got to do is just check in and manage the stop as the stop trails up. And so that's kind of an easy way to. We designed this so that it was like low stress, easy to manage, and not take a lot of time. And of course, if you're more if you're more hands-on and watching the market all day and active, so you can still use a lot of these concepts to play these things, to play these trades a little bit more actively, right? I guess I could say you could actually look to, like, you could have looked to get in at the trigger price the day that it was triggering from the pending list. But like I say, we don't necessarily recommend that. But a lot of times, you can still put a stop down at one of the prior pivot low or the low of the pattern, and things will turn out okay, right? So you could have a lot more activity doing that. Anyway, so far so good on this one. real quick, as long as I'm here, let me actually mark this target. There's the target based on the trigger price, and there's the secondary target based on actually getting in over the trigger price. So, and that way you're still basically capturing the same gain. And see, here's the thing: is like I was saying a couple minutes ago. The idea here is that that's like what we call, it's the first target. Now it's the only, we don't do multiple targets here. It's the first target, but the idea is that when it hits that target, it's not a bad idea to peel half the position off, and then if the stock goes into an extended run or makes an explosive move higher, we're going to try and protect those gains by the trailing stop ratcheting up, with the idea of it's going to try and hang back far enough so that, move on to the next one here, the stop's going to try and hang back far enough to allow for normal price behavior, so we don't get knocked out on like a little dip like this, say, right now. Hey, whether hypothetically, hypothetically, if there would have been a trade on this stock for this run, um, the idea would have been to, it probably would have triggered somewhere over here, right? I'm just talking hypothetically. Like, this is the actual, trade that's open now, but just hypothetically, conceptually, if we'd have triggered in over here, right, the stop would have at first gone down here, and then a couple days later it would have come up under these lows, and then you get this big move here and this pullback, and so obviously it would hit hit a target somewhere here, and then the idea would have been for the stop to be just far enough away that it didn't get tagged right here, so that you could stay in for the second leg of this big run, right? And then theoretically the target would be up here somewhere, and so then it would get hit and you'd have had a really nice trade. So that's sort of what we're looking for here now, and in the same stock there's a beautiful pullback, real nice orderly sort of pullback here, and the system system's not drawing these trend lines or whatever, but it's more of a coincidence, I would say, than anything, that a lot of times there's a real nice technical pattern that forms where I can draw a trend line, real nice technical pattern that forms at these pullbacks, and then when the stock triggers in, and so there you go. Just a simple, stock in an uptrend, nice orderly pullback, and then the pullback runs its course, and then we look for a resumption of the uptrend. And obviously, on this one, we're looking for it to bust out here, because the target on this is way up here at 1235. The target's always going to be static, right? It gets calculated when the stock hits the triggered today list, and then that target is just going to stay static. And so you can program a sell order in at your broker for half the position, and just monitor it to monitor. It's hard to type and talk at the same time. Monitor the stock, the stop loss in the open trades, and just go with that. So target on this is going to be 1235. Looks doable. Nice breakout from this pattern. Here's another one where, let's see, even today the low 1152, yesterday's low 1155, day before that 11. So this trigger price right here has been like, it would have actually, this is the day it triggered right here on 1-2, and so the following morning the stock opened right smack at the trigger price, right down there. And so that's kind of ideal. See, here's the thing: is the system's sort of calculating the barrier, or whatever, and obviously on a day-to-day basis, stocks they gap up, they gap down, they open in different places than they closed the day before. That's just sort of the nature of things, and so it's not a flaw in the system that you can't always get filled at the exact trigger price. That's just the nature of what the market does on a day-to-day basis. The majority of stocks, I mean, if you just and that's why I like these open, high, low, close bars rather than candles. It makes it a lot easier to see, where the opens and closes were to me visually. And so, the nature of the market is that on almost a daily basis, the majority of stocks open and close, and they open in different at different levels than they closed the day before. And then there's always if you actually watch like the time and sales at the open, there's always some like weird trades that are outside of the bounds and all that. And the open on a stock is sort of a questionable thing, because a lot of stocks, they have some sort of, you see a few like trades go through at like some weird price, and maybe there's only 100 shares or something, and then it takes a couple of minutes for the actual stock to what I consider start trading, right? And typically, it's not a bad idea to let the stock start trading. You start to see some volume trades come through on the time and sales. Then you get in, right? That's when you want to get in. And so, the market open's a really weird thing, because I guess there's a lot of, institutions or individuals or whatever, but I mean, there's a lot of market, buy orders at the open. Buy on open, sell on close. Buy on the close. But the market open tends to be like really, really sort of unusual if you actually watch the time and sales. But anyway, so my point is that this is one that looks like could have easily gotten in at the trigger price, and so there we are, target price. And here's another interesting point here: is you can see that the initial stop obviously got set right at the bottom of the pattern, and then literally the very first update, within a day, um, the stop got moved up, and this will get moved up again today, and so as quickly as the system can get that stop up based on what the price is doing, right? There's a really interesting one. Let me see. I think we're getting to it here. So anyway, this is a relatively new trade here. Let me go to this PLD. Now this is not the one I was thinking, but I think we're gonna get to it in a minute here. Yeah, here's a weird one. It's just been sort of hovering around. It's a nice pullback. There's your pivot low. Started a rally, and then it's been acting sort of crazy here. This is a REIT, right? So not a whole lot of ATR here, but it's been acting sort of crazy, and basically, like, as we speak here, it's just hovering right around the trigger price, and the stops come up. The only downside, I'm going to say, the only downside to ratcheting that stop up sort of fairly quickly is that we have seen a couple of trades that what happens is, they rally up, stop comes up fairly quickly, they come down and hit that stop, and then turn around and continue up, but they never hit, like, the initial stop, the pivot low stop. So that's the only sort of, but it works both ways. In lots of other cases, there's getting that stop up to break even sort of as quickly as possible works in your favor, because the stock like gets a little bit of a rally, and then that rally fades and it turns around, and just the whole thing, the pullback continues, rather than like the resumption of the rally. You get like a little enough of a bounce to trigger in, and then that fails and the stock's headed much lower. And so the closer that the stop is to your entry, the less risk you're taking. And so ideally, um, the full stop out is the worst possible. That's like the worst possible scenario, and it's pretty darn rare. I'm gonna say, well, I'll have to. I'm gonna crunch the numbers, but a full stop out's very rare, where you get triggered in, and then it actually hits the initial stop. I mean, it happens occasionally, and so I think the last one time that happened, it was like 6%, right? And so nothing extremely dramatic, but ideally, the ones that don't get the follow through, the stop comes up, they get stopped out quickly, and it's like the old Wall Street expression, cut your losers quickly, cut your losers short, and let your winners run. And so that's what the system is programmed to do, right? Here's another good example. And stocks, boy, this thing's pretty volatile too. So, see, or it seems pretty volatile. Lots of big ups and downs, but you can see on this that this trailing stop is already, I mean, 30, 90, 31, 20. The trailing stop started off way down here. It's been ratcheting up, and so it's already, minuscule in percentage terms. So one of two things is going to happen here. Um, this thing's either gonna sort of fail, come down here and hit this stop for a minuscule stop out, or it's gonna continue, and then the next move on this stop's gonna put it pretty close to break even here. So no big deal. I don't think, yeah, I hadn't marked the target on here yet. The target on this is 32 and a quarter, which is up here, and so big scheme of things, it looks reasonable. So based on this uptrend here, this is a pretty wild stock though. So, and then last but not least, this DXCM. Okay, so I guess it is one of the closed trades was the example I was looking for. Maybe I'll take a look at that real quick. I wanted to kind of make this relatively short show. They're already showing the empty podium on TV where Trump is about to speak. This is the one I was thinking about. This is a really interesting sort of, and after a period of time, you'll see all sorts of different scenarios that will happen, and this is an interesting scenario. It's actually kind of rare, right? And what I mean by rare is that, okay, so we got triggered in over here. There's the initial stop. It was not quite down at the pivot low. It was actually a little bit higher than that, which is interesting. But so it triggered in over here, right? 216 is pretty expensive stock. And the most interesting thing about this is that the stop ratcheted up after a couple of days, and then a couple of days later it ratcheted up just a little bit more, and the stop stayed at that level for like well over a week. That's what's interesting about it, is that this stock basically just went into sort of a sideways pattern, right? I mean, it was a nice setup. You had a big gap here and a run, and then that real nice sort of pullback, pivot low reversal day, and then a rally back up, and then the stock literally just sideways trading, which is pretty amazing because you don't really see that often, especially on an expensive stock like this, just kind of clanging around in a range. And so this, I think, is probably one of the longest periods of time that I've ever seen the stop loss just hang at one spot, right? And then, of course, over the past couple days, look what happened. Got some mojo going and finally, hit the target here. And so, very expensive stock, but that's a $14 gain, $14 move there, and as of last night's update, and I mean it's basically around where it was last night, so that's a 7% gain. So it doesn't look all that dramatic, but there you go. And so now this stop here at 212, sort of right below, and it's kind of amazing how the system itself knows. The system itself knows sort of I mean, you can kind of eyeball it or whatever, but this is all done with, calculations. And so it's calculating all this stuff. That's what's kind of amazing to me is that, everything behind the scenes is just fully automated and it runs. And of course, there's a little bit of manual intervention between the system updating everything and me having to update it into these data tables. So, but anyway, yeah, so it's doing everything based on just, calculations and math using the ranges and the opens and highs, lows, close, all that good stuff. The ATRs, all that, and it always like looks reasonable on the chart. I mean, almost always. Every now and then you see, I see something that looks sort of like an anomaly, but 90% of the time everything that the system's doing makes sense on the chart, which is pretty amazing. And so there you have it. So there's all the open trades that I just went over, and this one looking pretty good here. Don't be scared of the higher price stocks because if you've gone through the documentation, read over like the strategies page, you understand that what and a lot of people get hung up on this, especially people just getting started with trading or whatever. But it's basically everything's about percentages, right? And so a lot of people tend to gravitate away from more expensive stocks because they can't buy enough shares or whatever. But it basically has what really matters is how much money did you invest and what percentage gain or loss did you get? And so this thing's up 7%. The stock that triggered the other day is an $11 stock. It's only up point. It's not even up a percent yet, right? It's still sort of hanging around. And so yeah, I mean, think of everything in percentage terms and you'll be fine. You just buy less shares, but percentage wise, I mean, if you put $1,000 in a stock and it goes up, 7%, then you made $70, and it doesn't matter whether it was a $12 stock or a $200 stock. So, and you've probably noticed, I've noticed this, is that the more expensive stocks tend to have more institutional sponsorship and they tend to be, more do better, quite honestly, right? The Russell 2000 has been sort of struggling. The small cap stocks have been underperforming now for quite some time, well over a year. They underperformed last year, and meanwhile, the big cap stocks are where it's at, right? So keep that in mind when it comes to, and of course, the price doesn't always have to do with the market cap either. So anyway, don't be afraid of the expensive stocks, and I think you'll do fine. So anyway, I think basically I covered what I wanted to cover today. Take a look at these. You could take a look at the charts on these. This ARWR. This is I want to wrap this up as soon as I take a look at this. This has always been like this stock tends to really have something going, and so real quickly, I just wanted to look at this. I mean, I remember when this thing was like under $10. I'll be honest with you, and so I just wanted to mark the 59 or 64.20. So like right now the entry's up here, or I should say the trigger's up here, and depending on what this stock does, right? I mean, you guys know that we go through this quite a bit, but when we I like to look at the pending stocks because it's all what I do is I'll mark this like right now, right? And then I'll come back I'll come back to this next week or whatever, and so the idea is we want it to trigger like at the optimum time. And so what would not be optimum is for this thing to like over the next 2 days to rally up here and trigger in. What we want to see is we want to see the price consolidate and converge with this, and so you get like real nice sort of tight pattern. And then over here, hey, you get a trend line break and trigger in or whatever, and then you got something. But so that's sort of the way that when a stock hits the pending list, that's sort of like the setup, right? And this thing has an average range. You can see that on the pending list. You can see 5.4%. So this stock really tends to do something. So what I'm going to do is I'm going to put this back. I'm going to put this back here at like where it belongs, right? Which is going to be, yes, that's close enough. Put it back here where it belongs, and then when this does trigger in, it'll be interesting to see where and if that happens. Obviously, like if this thing continues down and then drops down here into the low 50s, it may just disappear from the list. So right now it's like it's setting up, and ideally, it would be triggering, way out here, in the future. So anyway, that's the way that it's sort of systems designed to work, and it doesn't always happen like that. Sometimes it rallies. Sometimes you'll get a big rally in something like this, and it'll shoot right up through there, and it could keep going too, right? So this stock has a good habit of making big moves. Anyway, so that's my show for today. Thanks for tuning in. Hope you enjoyed taking a look at everything. And as always, if you have any questions, feel free to shoot me an email. And I will see you guys here next Wednesday.